Hook the mystery. Every generation believes it has finally figured money out, and every generation is shocked when it collapses again. Here's the mystery. If financial crashes are so devastating, so well documented, and so predictable in hindsight, why do humans keep falling for the same economic illusions? Is it ignorance? Tonight, we're not just looking at what failed, but why it keeps working on us, over and over again. Setting the stage, the illusion begins. For most of human history, money was limited. You had to dig it, grow it, conquer it. But as societies grew, rulers faced a problem. Wars were expensive, empires were fragile, and taxes were unpopular. They needed a way to spend more without asking permission. That's when the illusion began. The earliest illusion was simple: representative money. Instead of carrying gold, people used paper claims backed by gold. It worked because people trusted the promise. But slowly, quietly, those promises started to exceed the gold behind them. Banks realized something revolutionary and dangerous. Most people don't demand their gold back at the same time, so they lent out more claims than they could ever redeem. This was the birth of fractional banking, money created from belief, not substance. At first, it fueled growth, trade expanded, cities flourished, and humans mistook short-term prosperity for long-term stability. By the 20th century, this illusion was no longer accidental, it was official policy. Central banks emerged as guardians of stability. Governments abandoned gold backing entirely. Money became debt by design. Every dollar, pound, or euro now came into existence only when someone borrowed it. Here's the illusion: wages rise, but the cause and effect is hidden, and debt must always grow faster than income or the system stalls. Breaking point: when reality interrupts, eventually, reality pushes back. Debt reaches a point where borrowers can't repay. Interest compounds faster than productivity. The Great Depression, the 2008 global financial crash. Each time, the illusion breaks, not because people suddenly became irresponsible, but because the math finally caught up. Debt-based money systems are stable only while expansion continues. When expansion slows, collapse isn't a possibility, it's a requirement. Fallout: who pays for the illusion? When the system fails, it's rarely the architects who suffer. Losses are socialized. It was unpredictable. We just need better regulation. The real cost is psychological, but still depend on them to survive. So they return. Every collapse brings reforms. New rules. You cannot build permanent stability on exponential debt. Instead, fixes usually involve lower interest rates, which extends the illusion while increasing its eventual costs. Each rescue plants the seeds of the next crisis. Modern parallels: the loop continues today. Global debt exceeds $300 trillion, over 3 times global GDP. Governments borrow to pay old debt. Central banks create money to stabilize markets. Asset prices rise while productivity lags. It looks different, it sounds more sophisticated, but the structure is identical. The illusion today is not that money is real, but that this time is different. It never is. Why humans fall for it? The real answer: so why do we keep falling for it? Because the system rewards short-term comfort and punishes long-term thinking. Because prosperity today feels more real than collapse tomorrow. Because economic illusions collapse slowly then suddenly. And because humans are wired to trust systems that feed them until they don't. 3 takeaways. Money is neutral. Its design shapes behavior, power, and inequality. Third, understanding the illusion doesn't make you immune, but it makes you less blind. Final warning and call to action: the question isn't whether the illusion will break again. It's whether enough people recognize it before the cost resets the system once more. If this made you question what you were taught about money, debt, and stability, stay curious. Subscribe for deeper breakdowns of financial systems, hidden incentives, and economic truths history keeps repeating. Because the illusion only survives as long as people don't see it.